welcome to Startup Street. I'm Ritu Singh and with me is Arundhati Ramanan. Here are the key headlines from the startup space. After PhonePe, fintech company Razorpay is all set to shift its domicile to India as it eyes a public listing. Co-founders Harshal Mathur and Shashank Kumar say the shift comes at a cost, but it is a small price to pay. That's an exclusive.
B2B manufacturing and supply chain enablement startup GoZero acquires US-based Awesome. The acquisition will help GoZero expand into the US market and will help grow its omni-channel retail presence for its private labels.
India's tech startups backed $2.5 billion in the first quarter of 2025, a 13.6% increase over the previous quarter, says Traction. Auto tech, enterprise applications and retail were the top performing sectors. Top investors in the first quarter include Bloom Ventures and Peak 15.
Indian government proposes to end the 6% equalization levy on online advertising in the finance bill. Move will benefit global tech giants like Google and Meta. The 6% levy has been in place since 2016.
Chinese smartphone and EV maker Xiaomi is raising up to $5.27 billion in a top-up placement, according to a term sheet seen by Reuters. The shares are being sold in a 52.80 to 54.60 Hong Kong dollars price range, the term sheet said. Well, those are the headlines that we've been tracking for you from the startup space. On what's brewing today, the Payments Council of India has made a submission to the Prime Minister's office requesting the reconsideration of zero MDR or merchant discount rate policy for UPI and RuPay debit cards. Now, this submission includes a proposal to introduce a controlled MDR framework that ensures there's continued digital payment adoption. For more on this development, I have with me Vishwas Patel, who is the chairman of the Payments Council of India and also the joint MD of Infobeam Avenues. Mr. Patel, thank you very much for your time here on CNBC TV18. First, just to make it very clear to our viewers in very simple terms, when we're talking about this reconsideration of the zero MDR regime, who exactly will be impacted? Because from a customer's point of view, making UPI payments, whether on merchant outlets, e-commerce sites, through their debit cards, through UPI, they continue to remain unimpacted, right?
You're 100% right. Look, PCI always stands for the benefits of the consumers, right? And we want to make digital payments happen. How do we take it to the next 300 million UPI users is our core concern. So whatever we are proposing, there is absolutely nothing that the consumer has to pay more while paying through either a UPI or a RuPay debit card.
Got that. So with that clarified, tell us about what exactly PCI has proposed when it comes to reconsidering the zero MDR policy, and what was the reason behind selecting the 30 basis point MDR for large merchants? How did you arrive at this specific rate?
Okay, if you understand how the payment industry works, right, there is a cost of plastic that is issued for, say, a RuPay debit card. There's an ATM card which is used for. There is a cost for the entire program. Right, even on the acquiring side, when we go across in the next hinterland of the country, there's a cost of marketing it, putting it, training the merchant, getting him to use this cashless kind of a digital payments. So if you want to keep increasing, there has to be money. And when you see that almost 80% of the transactions are UPI, and then there is zero money to be made, so there is hardly any incentive for any of our members at Payment Council of India to have that motivation to go down into the hinterlands and deploy, right? If we want this continuous growth, now we have already transgressed where 350 million people are already there on UPI, right? How do we take the next 350 million, right? And this is going to be a tough challenge because there will be language problems. There will be this next level of people to get them onto the digital payments ecosystem. So it's going to be increasingly difficult without any monetary rewards at the end of it, because anything free never works, right? So what we have requested the government is that, yeah. Okay, so what we have requested the government...
so tell us what exactly you've requested and how you arrived at the rate.
Okay, so what we have requested is that there are total 6 crore merchants. who are accepting UPI across the country as of today, right? And out of the 6 crore, 90% or more constitutes the smaller merchants, right? And we are saying that we please continue this zero MDR and the incentives for the smaller merchants. And the next phase is also going to be adding more and more the smaller merchants. So out of 6 crore, almost 5.4 to 5.5 crores are the smaller merchants, which are not going to get affected if there is our suggested MDR. What we are suggesting is this 30 bips, very controlled MDR is for the large merchants. Large merchants as defined by RBI. Now today, this 10% of these large merchants which are there today, they are anyway accepting credit cards and debit cards. And for credit cards, they are paying 1.8% MDR. So if they were to pay 0.3%, right, on a 100 rupee transaction, they get back 99.7, right, rupees back. And they have to pay this 30 paisa or 30 bips on a transaction. I don't think so it will be a problem for these large merchants. Right, and whatever the incentives that government paid 3,600 crores last year, right, most of it was processing for zero MDR for these large merchants.
Okay, Mr. Patel, very briefly, since we're running out of time, the industry's talked about doing away with the zero MDR for the longest time. How real is the proposal this time around? What is the kind of timeline the industry understands that the government will come back on whether or not it will reconsider this? And to what extent will that 30 basis point MDR cover that 10,000 crore cost of maintaining UPI annually?
Look, there are huge costs that the payment industry endures to make this growth growing. If you look at global standards, right, today, this year we'll be crossing 50% of the world's real-time transaction happening in India. And for that, a lot of costs is required. There is innovation, there is acceptance and the servicing of these merchants across this country. Then there is cost of onboarding, following all the RBI compliance norms, which are increasing day to day, the cost of technology, cost of servicing, so many other operational related costs. And it cannot go on this zero MDR anymore. The push that has come to the serve right now is that the incentives the government has reduced this year from 3,600 crores, which was approx last year, to 1,500 crores now, and the volumes has grown more than 40% this year, right? So how will the whole industry survive, and how are we to keep this growth going? We want to keep this growth momentum going, and the government has to understand that to sustain this growth, to sustain this kind of massive boost that the digital payments have, right, this kind of a small MDR, a control MDR on the bigger merchants, right, it will really help boost the ecosystem. And we are saying that for these large merchants, we don't need the incentives. Why should government pay taxpayers' money in incentivizing transactions for processing on these large merchants?
Sure.
Right, that's been our ask to the government. So we have written to the Prime Minister's office. We have written requesting the Prime Minister for his intervention in resolving this.
All right, Mr. Patel, we'll wait to hear more on, what the government decides in the matter, a key issue for the payments industry. Surely, thank you very much for your time here today.
Thank you. Appreciate it.
Moving on, All In Capital, a pre-seed venture capital firm founded by former Upgrad executive Kushal Bhagia, has announced the first close of its second venture capital fund with a target corpus of 200 crore rupees. The fund also includes a green shoe option of another 100 crore rupees, bringing its total capacity to 300 crore rupees. Joining me now to discuss the firm's growth plan is Kushal Bhagia, the founding partner of All In Capital. Kushal, thank you so much for taking time out and being here with us on Startup Street. You've made this first close, like I said, of your second fund. By when do you hope to close this round, and what's the kind of interest you're seeing from investors for Indian startups?
Thank you so much for having me here. It's my pleasure to do this. We expect to close the entire fund by end of this calendar year, and I think there's massive interest. People have seen companies that were started, 5, 10, 15 years ago that have gone public in the last couple of years, and family offices, fund of funds, HNIs, they all kind of realize that, if you want to get exposure to the future of what's going to come on the stock market, let's say, 5 or 10 years from now, those are investments that are happening in the private investment space. So as of now, there's massive interest in early stage AIFs that are doing startup investing.
Right, absolutely. So big interest there in early stage. I'm going to come to that in a little bit, but you're looking to invest in 50 companies over the course of the next 3 years, right? So you've already started deploying these funds. Take us through the firms you've already bet on and the ones you're in talks with. What's the investment strategy here?
Sure. So we typically see 400 companies every month, and we end up investing in one, sometimes two. And from this new vehicle, we've already invested in 8 companies. This is a mix of AI, consumer brands for India, consumer apps for India, and there's even a gaming studio we have back. We are quite wide and sector agnostic, but we have these frameworks that we use to identify founders in every domain that we go into. There are certain traits that we like. There's a founder market fit that we look for in each of these companies. From our last fund, we had done companies like Numi, which is a fast fashion platform, which is growing rapidly. Opened up 10 stores. Their online app is one of the top shopping destinations in India. We had done a space tech company called Peerside Space, which is building satellites to track ships in real time. We had done Magma, which is a B2B marketplace for the ceramics industry. So we are quite wide. We have a wide network of sector experts who help us evaluate and understand domains, and that's kind of how we double click with them and go deeper before we invest. From this new fund, again, like I said, we've done 8 deals. Yeah, go on.
Yeah, so you've done 8 deals in these funds. Which are the companies that you've invested in?
Yeah, so we've backed a energy bar for mass market India called Takat. We've backed an AI company called Mixar, which is building tooling for the 3D animation industry and making it 10x more efficient with AI. We've backed a co-pilot for doctors in India called MedMitra. We've backed Curvy, which is a shapewear and innerwear brand for women in India. We've backed a company called Plaza, which is doing quick commerce for medicines. And we backed NPrep, which is a edtech platform for nurses in India. So those are some of the companies we've done.
Right, and you said you say that you're sector agnostic, but you focus largely on consumer tech, deep tech, fintech, and consumer brands, right? Even from the names that you've mentioned, that's what you're sort of focusing on.
Yes.
Why is it that you're betting big on these companies? What's the rationale here? And why do you find them so exciting?
So we really look for a why now, and when we go into a company, we look for what's changed in the world, which makes this a great idea today. That could be a technological why now, that maybe AI lets you do things which you couldn't do earlier, or it could be a regulatory why now, or it could be a consumer behavior related why now, where consumers expect a new kind of service or product which they were not getting earlier. So we are quite that's kind of where we start. But in these particular spaces, I think AI for sure is a space where there's a big why now. Like there's this new technology on the block which is letting you do stuff which was just not possible till even 2-3 years back. It's reducing time that we used to, like, a human would take to do certain tasks maybe in 3 hours, 4 hours. AI would do it in like minutes. So if you can design experiences for users where their day-to-day tasks can be cut short by that amount, a human can now do a lot more. So that is something we're very excited about.
Right.
Then in terms of brands, I think there's a wide behavior in India now where young Indians don't want to use their dad's brands, so they buy brands which appeal to them and that are built for them. Their tastes are different. Like we've seen that with Numi, their audience is primarily Gen Z, and the way it's been built out, it's very different from the last generation of brands. So I think consumer in India is on a huge secular uptrend. Consumption is increasing. People are catching on to global trends much faster because of Instagram. They're more discerning in what they are buying. Quick commerce is also fueling this. Whatever they are buying is also accessible to them at very, very easily and in a very impulse-driven manner. So that gives a huge platform for someone to launch a new brand, because you have discovery on Instagram and then you have fulfillment via quick commerce. So that's a deadly combination. And
Right.
yeah, that's the theme we are very, very bullish on.
Yeah, so very bullish on the consumer theme. All right, Kushal, we're completely out of time. But thank you so much for joining us on the show, and we wish you all the best on this journey going forward.
Thank you so much.
All right, on that note, we're going to take a short break. But up next, ice cream brand GoZero has secured 30 crores in the Series A round. We'll speak to its founder on the other side, so stay tuned for that. Guilt-free ice cream brand GoZero has secured 30 crore rupees in a Series A funding round from existing investors, DSG Consumer Partners, Sama Capital, V3 Ventures and others, taking its total funding to $6 million. Now, founded in 2022, GoZero says it recorded its highest ever sales in January this year, crossing 5 crores in revenue, and claims to have a near 70% market share in this space in quick commerce platforms. For more on their plans ahead and how they will deploy this capital for growth, I have with me Kiran Shah, the founder and CEO of GoZero, and with me also is my colleague Arundhati. Kiran, thank you very much for your time here on CNBC-TV18. But before we get to that funding round, start by telling us what really got you to start an ice cream brand, and what is this intensively competitive and crowded market with large players and deep pockets, and how consumer perception of guilt-free indulgence has evolved since you entered the market.
So I've come from a family of ice cream business, and since 1971, my family business has been in ice creams, and I've grown up having ice creams all my childhood. So I think when I started and wanted to become an entrepreneur, this was one category which was very, very close to my heart, and I've seen it up close. So that was one. Second, I think post the pandemic, I realized that a lot of consumers were seeking better for you options, healthier options. So when it came to desserts, they were seeking options which did not have sugar in it. If it was any other snacks, they were wanting option without any refined flour or palm oil. Also, I think during this time, there were already 3 or 4 brands which had already started better for you ice creams. But I think the taste was not up to the mark. And I think no matter what, at the end of the day, ice cream is an indulgent product. So you want to have it for the taste, for the indulgence. To crack that, I started GoZero with our proprietary blend of sugar replacement, which gives you exactly the same taste, same texture and indulgence as a regular ice cream, but with 50% less calories. So with this, I started.
Right. Hi, Kiran. Arundhati here. You claim to have captured almost 70% of the market share in the guilt-free ice cream category on quick commerce platforms, right? So what are the factors that contributed to this, and how large is the market for this?
I think quick commerce in the past couple of years has completely taken all of India by storm. And there are certain categories which are really scaling very rapidly. Ice cream is one of them. So, for example, the second most searched keyword today on quick commerce is ice cream. The number one is milk. So there is a very clear product channel fit as far as quick commerce is concerned. And as soon as we realize that, we ensure that number one, we double down on this channel because a consumer wants an indulgent product. They want it in 10 minutes. So you have to be available whenever they want. Second, I think from our innovation standpoint, we have given flavors and formats which consumers have grown up eating. For example, we launched our duets last year, and within 3 months, they became the bestseller on Blinkit, for example. So I think working very closely with quick commerce partners, understanding what the consumer wants, also the disposable income, especially in metros and tier 1, is rising. So all of these factors doubled down on quick commerce the last couple of months. And I think today we are not just the fastest growing ice cream brand, but we have 70% market share on quick commerce in the guilt-free ice cream category.
All right. So, now that you've got this 30 crores in your Series A round, how exactly are you going to deploy this to continue to grow at this kind of a pace?
So the 30 crore is actually our third round, and the good news is that while we have this money in the bank, we still have 50% of our round 2 with us, which means we've been building in a very capital efficient manner. So this summer is all about consolidating the kind of growth we've seen in the couple of seasons before this. Ice cream is a very seasonal business. So the months from March to June, we do almost 50% of our annual revenue. So with this capital, I think we are going to double down. We are going to launch some very interesting formats. For example, Casata, which is a very classic, popular flavor, which everybody has grown up having. We are launching that in a guilt-free format for the very first time on Instamart. Along with that, we are also entering tier 1 and tier 2 cities. So for example, now we are available in Jaipur or Surat or Baroda, along with, of course, all your major metros and tier 1 cities. As quick commerce scales, adds more dark stores, more aggressive in their penetration, I think it's a perfect launchpad for GoZero to kind of gain double-digit market share in this summer season. And of course, after that, we will kind of evaluate what other categories can we kind of extend our zero sugar proposition in. For example, shakes or chocolates could be next for us.
All right, so shakes or chocolates could be next for you. All right, Kiran, thank you so much for joining us on the show, but we're completely out of time.
No problem. Pleasure.
Moving on, e-scooter maker Ultraviolette plans to hit Dalal Street by 2027 with an aim to raise at least $500 million. The company plans to scale up its current footprint from 15 cities to 50 cities by the end of the year. My colleague Parikshit Luthra caught up with the company's CEO Narayan Subramaniam and began by asking him about the company's growth strategy. Here's a slice of that conversation.
As October 2024, we were operating only out of one city in Bangalore. And in the last 5 months or so, we've scaled from one city to today, 15 cities pan-India, from Chennai in the south to Delhi in the north, Patna in the east to, of course, multiple now showrooms in Gujarat as well on the west. So we've covered 15 cities across India. And by the end of 2025 calendar year, we should be in 50 plus cities across the country. And early 26 is when both of these products launch. So in the meantime, we will see active scale up of volumes for the F77 Mark II and the Super Street. We are going to see the new products launching in Q1 2026. Interestingly, 2025 is also going to be the first time that Ultraviolette gets into the export markets. Our vehicles are certified for Europe and homologated for Europe. And we should see the F77s made in India go across Europe, from Germany to Italy to Spain, France, and UK.
In terms of your IPO strategy, we've been seeing reports about your plans to list sometime in the next 2 to 3 years. Could you give us a timeline, the target that the company has in mind, and how much would you like to raise from the market?
I think the timeline that you mentioned is accurate. We are looking at tentatively 2 to 3 years. The more important aspect is that we have a stable business with 4 different products or segments now open in the market, and multiple markets beyond India also having gone live. We are looking at Europe to begin with. We're looking at Latin America, where there's a lot of interest. We're also looking at parts of Asia. So these are key markets that we would focus on in the next 24 to 36 months. And of course, given our roadmap, we should have 4 different segments, including scooters, in the markets at that point. And I think that is the right time to look at an IPO scenario. And I think we'd look at raising between 400 to 500 million given our current plans. For